When markets fall, fear shows up. Your instincts urge you to act, to stop the pain, and many people will panic and sell. Successful families handle this very differently. They rely on a precise internal dialogue or scripts, thoughts that they've documented well in advance to guide their decisions when markets feel unstable. They don't pretend to be fearless, they acknowledge the uncertainty, and they know exactly how to behave. Now, what you say to yourself in these challenging times will inevitably determine whether you preserve and grow your wealth or you completely undermine it. Today, I'm going to share that dialogue word for word. I'm Sam Inson, Chief Executive of AS International, and for over 20 years, I've guided globally minded, successful families through every market scare. The investors who thrived are not the ones who predicted a crash. They're the ones who best manage their internal dialogue or their money scripts when volatility inevitably shows up. Remember, markets don't destroy wealth, it's your behaviour that actually does it. For millennia, our ancestors have survived by avoiding risk. And that same neurological wiring within our brains now betrays us as investors. A lion in the wild, red lines on a screen. Wildly different, but the same fear response. When markets fall, as they always do, your brain doesn't see the numbers. It perceives threat. Loss triggers the evolutionary instinct and not reason. Our natural response is to flee, to get away from danger as quickly as possible. Against a lion, this makes perfect sense, but with long-term investments, it's actually often an overreaction. This is why people typically sell at exactly the wrong time. It's not logic, but it's biology, our survival instinct hijacking long-term thinking. And successful families don't fight these instincts. They acknowledge them and they follow a deliberate thought process. That's what allows them to stay invested while so many others panic. So let's go through the internal dialogue or scripts that these successful families rely on during market turbulence. These are the exact things that you can tell yourself. This fear is entirely natural. It doesn't mean disaster. I acknowledge it, but I won't act impulsively. Fear feels like insight, but it's actually biology. Naming it allows you to separate the feeling from action. I invest for long-term growth. Temporary volatility is expected. It's a feature of investing in capital markets, and it's not a bug. Avoiding discomfort today would jeopardize my future wealth. Markets fall because that's how returns are earned. Volatility is the price that we all pay in order to benefit from the higher long-term rewards. It's never ever a signal to panic. I've experienced previous downturns. I've felt fear before, and markets have recovered. I'll survive this one too, or this too shall pass. Our minds can exaggerate fear. Reminding yourself of history can restore wise perspective. My portfolio is diversified. I have liquidity. I don't need this money right now. I'll follow my plan and not my feelings. Many investors panic because they have no documented plan. Having one, a really detailed life strategy, ensures your asset allocation protects you and keeps you safe and secure through all periods of short-term market volatility. If my friends were panicking, I'd reassure them. This is temporary. Stay the course. I'll give myself the same advice that I'd give to my friends. Fear often turns us into our own worst critic. Markets are mispriced now. This is where disciplined investors build true wealth. I'll stay invested and I won't sell. Generational wealth is created when others sell out of misplaced fear. Your mindset determines whether you see this as a risk or as an opportunity. The brain runs on autopilot during fear. These internal dialogues or scripts interrupt that autopilot. They activate the rational part of our brains, the thought and impulse control. Neuroscience calls this cognitive reappraisal. It doesn't suppress emotion, it reframes it. Fear can become a signal and not a command. This is how disciplined investors act differently from everyone else. The key is rehearsal. Prepare these dialogues whilst markets are calm. During a crash, it's just too late to build them. Build your own internal dialogue. Number 1, ensure that you have a detailed and documented investment policy statement that systematically records wise counsel, wisdom and beliefs that you agree with. Number 2, clarify your time horizon. Mine is forever. Short-term volatility is irrelevant if your goals are decades away. 3, confirm your liquidity buffer or your war chest. Knowing your cushion restores calm. 4, decide in advance exactly how you're going to respond and then follow the plan. Don't improvise. 5, rehearse this dialogue out loud. Visualize staying composed when fear hits. Markets will crash again, that's absolutely certain. The difference is how you are primed to respond. Wealthy families don't feel less fear. They talk to themselves differently, resisting the inner voice telling them to stop the pain and to try something different. They trust the plan created for them by their financial life managers, and they always stay the course whilst others panic. Your portfolio doesn't need better predictions. Science proves these don't work. You need better internal dialogue or scripts, so start preparing now. If you found this video useful, I'd love to create more videos answering questions you have about living a truly rich life. Please leave a comment or subscribe to my channel for more.